Okay, well, thank you very much. As you heard, my name is Jay Risch. I'm the Director of Government Relations with the Wisconsin Bankers Association, so we're the industry trade association. We've got the smallest bank in the state, the biggest bank in the state, everyone in between. We've got here today Security Financial Bank, Bremer Bank, and the folks at Dairy State Bank in the back there, so please do all your borrowing from them. I will, and Paul did a real nice job of starting off of where you want to look for your money in the first place, and I'll start out with a quote about what a bank is from noted banking historian Bob Hope. A bank is a place that will lend you money only if you can prove that you don't need it. That's the joke, but the reality behind it is a bank will lend you money if you can prove that you can pay it back. And one of our bankers who was speaking before the Assembly Financial Institutions Committee, kind of a state of the industry thing, talking to the Assembly members, and he said, think of everybody in your family, your uncle, your nephew, your nieces, would you lend them money? And everyone kind of chuckled. You guys didn't chuckle, so you all have more trustworthy relatives than the Assembly members. And they all kind of nervously, chuckled, oh, geez, I wouldn't. And he said, well, they're coming and asking me for money every day. So the idea is you need to prove to the bank that you are a good credit risk. And in your packet, I'm not going to read every word of it, but in preparation for today, I went to commercial bankers, and I said I'm going to be talking to entrepreneurs looking to start a business, folks that help people start a business, people who may want to expand an existing business. What do you wish those people knew before they came into the bank? And what follows in your packet, I'll touch on some of the highlights. The first one, know the various C's of banking. Some people say there's 4 C's, some people say there are 5 C's. I did the math and there wound up being 7 C's. All of which you as a potential business customer or someone helping someone seeking to get a loan needs to just have an understanding of before you go in, because that's what the banker is going to be kind of checking their boxes. Cash flow, how is the money going to come in and go out? Your capacity, how much of a loan can you handle? My own personal capacity story was when my wife and I were looking to buy our first house, and we went into the bank and we said we would like X, please, and they said we would be happy to give you X minus $25,000, and I was not happy about that. And but only later did I realize, thank goodness they didn't approve me for more. I wouldn't have been able to handle that. Now, I didn't then write my banker a note to say thank you for making sure I didn't get overextended. I grumbled and said, why isn't he helping me? And, I don't like him. But capacity, that's something that, you need to know, or the person you're advising, really, truly, what can they handle? Capital, the skin in the game, you need to prove, that you're not just looking to gamble with other people's money. You've got your own interest in it and an interest in the business succeeding. Conditions, what is your business? Is it particularly sensitive to a downturn? Is it very, tourism, for instance, are you going to be making all your money in 3 months? These are the things you need to have thought of ahead of time. What is your collateral? Obviously very important for someone willing, before a bank's willing to lend money. Credit, have you paid your bills on time? That's obviously something that would be done with a credit check, but the better your credit, the better a credit risk you are. And finally, character, and this is probably the most nebulous, and this, various federal regulations have removed this from the equation just a little bit, but I mean, it's still a people business, and I mean, ultimately, you're across the table from somebody, and the more of a trustworthy individual you can present yourself to be, the better your chances of getting your loan. So Paul touched on the well thought out business plan. This was probably the thing that got discussed the most by our commercial bankers, and they just said we just cannot stress the importance of something written down. And you can find online guides to help you. UW Extension can help you set these up, but you need to be prepared to say exactly what the business would do. And you can really never be too detailed. And you need to be able to say exactly what you need the loan for. You can't just say, I'd like, $500,000 for stuff. It's, here is, itemized what this all will cost. And project your expenses, your income, and be prepared to be wrong on your income and your expenses. Be prepared for your income to be less than you think and your expenses to be more than you think, and to be able to show these worst case and what if scenarios. It's that sort of thing that makes the banker think, this person is a good credit risk. They have thought this through. They have thought of plan Bs. It's those things that can make the difference between a yes and a no. Anything that would show why you're different, any niche that you'd be filling, any specific experience you have in the industry that you're seeking money for, a location and barriers to entry for your competitors, everything that makes you unique, that's the sort of thing you want to have in your business plan. Let's see, one other thing. I'm trying to tell you the reasons why you would avoid a banker saying no. Banks only make money when they say yes, because that's how banks make money. It's by lending money and then getting paid back. They only stay out of trouble when they say no, but obviously that person wants to say yes to you on the other side, so you need to help them by showing what a good credit risk you are. The final things is just have the paperwork, have your last tax returns. If you're buying an existing business, have all their books and be able to say historically, here's what we can expect, and here are my ideas from the future. I will finish my part of the topic, and this part I will read verbatim from a banker on how to make your presentation to the bank successful. And he says, if you can't sell the banker on the strength of your business loan request, how will the banker sell it to the bank's loan committee? Lack of preparation on the part of a potential borrower is a sign of weakness, and weakness means the risk factors go up. If you're not prepared, you diminish your credibility. The less credible you are, the greater the perceived risk in your request, and the greater the potential to have your loan request denied. And I think that neatly sums it up. When you're meeting with your banker and asking for this loan, he doesn't just have the money in his drawer, especially on how big the loan is and how complex it is. He goes to a loan committee, and that's a board member. It's the brass in the bank, and they sit down. And now you're not in the room at this point, but he is trying to sell your request to others. So if you can't sell the guy you're talking to, how is he going to sell it to the people who will ultimately make that decision? So I just want to say best of luck to everybody. I mean, if you want to start a business and obviously talk to Security Financial Bank, Bremer Bank, Dairy State Bank, or any of our bank members here who I didn't see, but for your legal needs, I already know you got that covered. So, all right, well, thank you, everybody.